Hello, hello. How we doing, everyone? Welcome back. One second. Let me go grab my phone real quick so I can see the chat. One moment. Alrighty, guys. Should be good to go. Should be able to hear me. Let me pull up the chat real quick. All right. We're back in business. Glad to be here, guys. How we doing? Happy September to everybody here. Happy Sunday. Ready to get back to business. Hope you guys had an amazing month of August. And how was everybody's month of August? How we all doing? Amy, welcome back. Yeah, my absolute pleasure. Kevin, welcome back, Dylan. It's been a minute. Hope you enjoyed your vacation. Sure did. Sure did. Of course, when you run a business, you never take time off, but was able to take at least some time off from the charts to recalibrate, get off price action, because being dialed in high performance in trading is extremely demanding. So it is good to take some time off to regroup and rearm, as they say. So glad to be here with you guys. Luca, what's going on, bro? Glad to be back. Yes, sir. We are back in business, sir. Eslam, welcome back to you, sir. All right, guys, let's get to it. Number 120. All right, guys. And then as always, I will take questions at the end. So once I get through the analysis, what it is that I'm looking for, I would also be more than happy to take your guys' questions as well when we get to the end. So with that, let's go and dive right into it, everybody. All right, so starting from the 3-month chart here with the US dollar. So as always, we're going to go through dollar, bonds, and NASDAQ. And that already is going to touch on your question, Paul, with regard to, let me go and pull that up here in the Discord here so I can have that to refer to. Yeah, Paul, so I'll touch on your question as well as I'm going through this, because it is fitting, because of course, one of the things I'm doing with pre-market analysis is I want to understand where we're at with regard to the entire financial system. And that is first understood with the dollar. And then, as you mentioned, the bonds are going to drive the price action of the currency. And then, of course, we understand bonds and currency are going to drive the action in the stock market. So you're absolutely right in terms of being focused on the interest rates. And I'll go ahead and share some insight with you there as to how we use interest rates to support what it is that we're looking at. For those of you guys that may be new, first time here, it might feel like a lot early on. That's fine. What I always say is keep showing up, take notes, it will become clear. Those that started with me 6 months ago that are already seeing consistency, are already seeing profitability, they didn't feel like a rock star when they first started. It felt like, wow, this is a lot of shit. But if you want precision, this is what it takes. So for those of you guys that are new, roll your sleeves up. Let's go and get to work. Gary, my man, glad to have you, brother. All right, so let's go and get into it, guys. We're going to start with the US dollar, because as always, we understand for the newer folks that the US dollar is going to drive the action in other markets. So we're going to start with dollar, and then from there, we're going to go into bonds. Why are bonds important? Well, we understand that currencies now are fiat, so they're a unit of debt. If they are a unit of debt, that means they're going to be highly sensitive to debt-related instruments, right? Like your bonds, your interest rates. So that's going to drive the price action in the dollar. Well, the price action in the dollar and the bonds is also going to drive price action in the indices as well. So what I want you to understand before we even dive into the specifics and the candles and everything I'm looking for, you have to understand how these markets work. It's like a Swiss timepiece. There's a lot of different components and cogs that go into a nice watch like that. The markets are the same way. So don't look at everything independently, like, oh, the dollar's different than the bonds, different than the indices. They all come together, right? And this is how you frame a macro perspective with precision. Let's get into it. And again, macro perspective is long-term, month to 3 months. So let's go and break it down, guys. We're going to start with the 3-month chart here for the US dollar. So what I've been watching on the 3-month chart is this inversion fair value gap here, right? We broke down below it with the closure, and then now we've traded back up into it. Make sure everything's good on the recording. Yeah, good. So we traded back up into it, and we are starting to reject. What I want to specifically take your attention to is how I want to put the midpoint on here. As we traded up into it, we couldn't even get up to the midpoint. Generally, that's going to be a sign of extreme weakness. So that's what I'm sticking with going forward. So I'm looking for sell side here, and that'll be more evident on the monthly and the weekly chart. But just know these levels are going to be important to me on the downside. Then if we really continue to flush from here, we could make a run all the way down into these equal lows, which dollar at the 88 would be crazy, but we are in crazy times, folks. So that's what we're looking for, as long as everything remains true. I was getting a question from my man Leon, as you mentioned, with the commitment of traders, right? So I want to touch on that as well. Let me go and bring that up. So you're mentioning the commitment of traders is extremely bullish. Absolutely. The commercials on the COT are extremely bullish, right? It's above the zero line that we make. We don't use the zero line on the actual COT. We create our own. So absolutely, you're right. They are extremely bullish. One of the key things with COT, and Tommy will be able to give you a much more detailed answer on this, but the big thing with COT is understanding that it's going to be leading, not lagging, meaning the indications that you're going to get from COT are going to manifest before the price action starts to print bullishness. So with commitment of traders, it's really good for context, right? Like for example, if we're anticipating a reversal, we dropped into a discount, we're bullish, so we'd expect the market to trade higher. Then I would use the COT as a confirmation for that. One of the things that has really helped me, because there are going to be times where the fundamentals, where the commitment of traders is going to be at odds with the price action. Price action is always king. Outside of these candlesticks, in my mind, it's all bullshit. So if you want to cut right through the noise, look at the price action. You can use those other fundamentals to further support or confirm what you're looking for, but outside of the open, high, low, and close in these candlesticks, it's all you're going to need. So hopefully that answers your question, Leon, and then my man Tommy's going to follow up with some greater detail because he does know that on a much more intricate level than I do. So let's go and break it down here. So again, bearishness on the 3-month chart. Why am I starting from the 3-month chart? Because this is going to give perspective on the monthly, weekly, daily, and if you know the daily, then the intraday becomes really easy, right? So it's a process, again, of always going top down. All right, let's drop down to the monthly here. All right, so now refining down to the monthly chart, I'm watching this gap here. Why this gap here? We'll extend it through. You'll see we used it once, twice, 3 times. So it was used as support when the market was bullish. Now that we've broken down through it, closed below it, we're hitting it, we're using it as resistance. That's why it's an inversion fair value gap, because it's inverting its role from support to resistance. That's why you get IFVG. So break down below it, trading back up into it. One of the key signatures that I'm watching here is how we stayed in the lower half as well. Another thing I want to take your attention to as well is this is an inefficiency. We're respecting the lower half, but we also have this wick here. And then you'll notice how we're also respecting the lower half of that. So as of right now, the dollar is bearish, and I will look for sell side at the 96.37. If we flush through that, then we have 94.65. And then down through that, my attention, let me see where we have a lower close here. Yeah. And then through that, my attention would be on this order block here. So these are my downside levels, and then that order block puts us at the, let's call it 94 big figure number. So 94 big figure number is going to be the draw liquidity as long as we continue flushing to the downside. And then, like I said, if we really continue to accelerate, we have a breakaway gap here, another one here, IFVG respected in the lower half. Everything is weak with regard to this market. So we could even make a rundown into sell side there as long as everything remains true that we're talking about here. All right, working down to the weekly here. So now I have that same monthly gap. So that same monthly gap that we were using here, you see they worked it at support when the market was bullish, but now you're seeing how they work it as resistance when the market's bearish, right? If only the support and resistance we first started trading, if only that shit worked this good, right? So inversion fair value gap, we broke down below it, very important, and then the market's trading back up into it. What did we see though? The market hit it, respected it, couldn't get above it. That's telling you something. What's it telling you? The market's weak, right? Because it can't get up into the upper half. So now zooming in here, we'll probably zoom in. Let me give you the targets here again. Same thing on the weekly chart. You can see now this is a nice swing low. And then again, if we accelerate through that, we have a nice swing low here for the sell side that the market will want to gravitate down into. So let's go ahead and zoom in here. All right, here we go. So you can see this is again the monthly level. I shouldn't have that labeled monthly, but sorry, I think we're on the same page here. You see we traded up into it, bodies respected it, and then you'll see where the bodies actually stopped. Really interesting. Look at how the bodies here, look at how they work consequent encroachment here. And people think the markets are random. Look at that. Bodies beautifully respecting it. Really nice. So looking at this here, we have a inversion fair value gap here. Perfect. So you'll see the bodies traded up, but the bodies respected upper quadrant. From there, we rotated to the downside, came back up into it, but could not get into the upper half. And then from there, we sharply broke down. So as of right now, everything's still bearish for US dollar. We have another wick here. We're still staying in the lower half of that. All these wicks here telling me we're seeing distribution or accumulation of short positions, and we're likely going to rotate to the downside. So as long as we stay below this high here at the 99, we'll call it 99.3 level. As long as we stay below that, I'm bearish on dollar, looking for lower prices. Now, the daily chart is where it's going to get interesting. Well, actually, before I even go down to the daily chart. So for those of you guys that have been through the month timing, month 3 content, where we talk about high resistance liquidity runs versus low resistance liquidity runs. Before I even drop down into the daily and the hourly chart, what are we seeing here on the weekly chart? Exactly what I told you to look for and taught you to look for in terms of identifying high resistance liquidity run signatures. Forex traders were pushing real hard in August, and unfortunately, a lot of them just getting absolutely toasted. Easy to avoid that if you know how to identify high versus low probability market conditions. So what I'm saying is, look at this price action here on the weekly for the US dollar. See weekly up here. We're seeing a lot of candles doing what? Sharing the same range, which means they're overlapping, and showing a failure to displace, which means it's not really displacing away from it or showing any energy to run away from it. Kind of like what we saw here, right? Like for example, right, we dropped down to the monthly gap, quickly trades higher, fair value gaps left open, and it's just running, right? It's not a lot of overlapping price action. This is really easy to trade, right? When the market's moving like this, or even the sell side of the curve here, when the market was breaking down, really easy stuff to work with. Now, where it can get more tricky, more difficult, especially for more inexperienced traders that don't know how to weigh all these factors out, look at what we have here. We've had the last, let's see here. Yep, so the last about 84 days consolidating. So 12 bars, that's about 3 months. So for 3 months, we've been seeing a lot of the same price action sharing the same range. When you see that, that is an indication of a high resistance liquidity run. I get asked all the time, Dylan, how do you know it's a high resistance liquidity run when you get to 930? How do you avoid getting chopped up? How do you know not to take certain trades? If I start to see signatures like this, indications of price action that's giving overlapping price action, it's showing a failure to displace. Do you see any fair value gaps, imbalances? You don't see any of it here, right? So I need to get my charger here in a second. So when you start to see this type of delivery, it's indicating to you what? That the market's going to be choppy. It's going to be a high resistance liquidity run. And the best thing is now you can predict it. While a lot of other people could be, oh, the chop is real. We know where'd that come from? You're going to know what you're looking for. So now before I even drop down to the daily chart, we have indications that the market's in what? It's in a consolidation. So now working into the daily chart. Dylan, why do you take off the month of August? Well, look at what we got here, folks, right? Can this be traded? Absolutely. If you know what you're doing, if you know how to scalp, if you know how to trade 15-minute hourly liquidity pools, you know what you're doing, this is absolutely tradable. So I'm not saying nobody can make money, nobody can trade this, but if you're a developing trader, why would you want to? Because it's probably going to lead to what? Frustrations, blown accounts, and the worst thing is you're going to think you're a shit trader, but you're actually not. You're just trading in really bad market conditions. So what I'm watching here, guys, is we have, well, actually, before I even get into what I'm looking for, I want to touch on a little bit more insight from August, but I do need to go get my charger. 1 second, guys. Getting back into the groove of the whole, back into the groove of the whole live streaming thing. 1 second, guys. Alrighty, guys. Appreciate you bearing with me. Charger's on. Should be good to go. All right. So as I was saying on the daily chart, before I go into what I'm looking for the coming month, make sure everything's good here. Hey, Samad. Happy Sunday to you, bro. All right, so as I was saying, before I get into what I'm looking for, let's talk about kind of what we saw in August, because this is very important, guys. August is going to roll around every year. So if you want to be a trader with some longevity, trust me, these are things you probably want to start writing down. So looking at this here, I have this vertical line. Why is that? I'm denoting August 1st. So August 1st, we saw what? Nice little plunge down into the range. And then what did we see the market do? We stayed stuck in between this range low and this range high here. And then you can see we just banged around inside that range here. So especially if you're like a swing trader or a position trader, or you're trying to look for sustained price runs, It's not going to work here. That's why it's very important to understand market profile. Now not market profile like the volume stuff on the right here. I don't use that. Market profile in the sense of like, what's the profile that we're under? Are we in expansion, retracement, reversal, or are we in a consolidation? And I think we can all agree this is a consolidation. But now the key is, how do you know, right? How can you predict it, right? The way you do that is you have to understand time, right? We understand looking at the candles and the price action, but if you're a smart money price action ICT trader, what comes before price? Time. Time first, then price. It's not just time of day. It's time of year, time of week, time of day. All those are factors. So why could we expect a consolidation here? Because it's the month time of August. And then when you see the price action give you signatures, that we're in a consolidation, which is what? Overlapping price action, lack of displacement, and candles sharing the same range. So if you identify that, that gives you a huge advantage over traders that are going to be in here gambling. They're going to be in here gambling, trading high leverage, trying to make a lot happen, and unfortunately, it's not going to work. So now, forget what asset, what time frame we're even looking at. Now imagine this is the 9:30 open, and I'm going into the AM session to trade, and I start seeing this. Am I going to be in there high leverage? Probably not, right? So those are indications you can start using so that when you're trading, you don't have to blow your account on a high resistance liquidity run day. Because if I take a stop out or maybe even two in something like this, I'll just stop for the day. I'm not going to take a third, fourth, fifth trade and blow my entire account when the price action looks like this. So it's very important to be able to identify that. And it's a huge skill set that many don't focus on because, of course, when we're new, we just want the entries, the new strategy and whatnot. But trust me, this is the stuff that's going to save you long term. So now what I'm looking at going forward here is we have a city. We have this fair value gap here. We hit it once. This here doesn't really count. Let me show you what I mean by that. Like that price action is. Okay, so on that day, that was a big errant wick. So ignore that wick because you see it's not even there when you look at the lower time frames. So I'm discarding that wick in my analysis. Just wanted to show you why. So this wick here, I'm not even using my analysis because it was like a data feed error. If you looked at it on the 1 minute chart when it happened, like repriced like hundreds of pips higher and immediately snap back. So this wick here isn't a factor in my analysis. What I am looking at is the fact that, again, top down, monthly, weekly, what? The market's bearish. So I'm still looking at that on through the lens of that in the daily chart. So now what do we see on the daily chart? Market ran higher, cleared out a high, we broke down, imbalance, we traded up into it here, respected it, broke down. This up close candle, which we talked about being a bearish order block, we've respected that, and now we're breaking down to the downside. So what I'm looking for on the daily chart is that's why I said when I was on the weekly, which is it's going to get interesting in the daily because everything's obviously bearish rather on the monthly, the weekly, but now we drop down to the daily, we have this to contend with. So on the daily, I'm neutral to bearish. I'm bearish because everything's pointing lower, but I also do have to factor in the fact that we're in a consolidation here. So when we're in a consolidation, personally, I'm not trying to guess where we're going to break out. I just want to see it leave the range because once we leave the range, then that's going to give more favorable price action to work with and a lot easier to call, predict, and easier for me to share with you guys what it is that I'd be looking for. So looking for bearishness, as long as we stay below, just the 99 even level, because really we shouldn't get above the order block here. Let's make that black just so you guys can see that here real quick. So as long as you remain below that black rectangle, which is this up close candle, I'm looking for lower prices. If we get above that, then I'm neutral to bullish. So that's what I'm looking at. Sell side here. I like that as a draw initially, as long as we keep selling off and then draw down here. And then we have these other levels that we were looking at on the higher time frames. All right, let's drop down to the 4 hour. See what I mean? That wick isn't even there on the 4 hour. That one that was there on the daily, it wasn't even there. So you can see that order block that I gave you before we left off, because this is August 5th. I remember I did the last live stream here, and I called the turtle soup here above that high into the order block to sell off and attack the inefficiency here. So that was the easy read based off institutional order flow, weekly templates, time and price, all the things that we use for insane level precision. So that was a nice turtle soup into the order block breakdown. And now we're just banging around again with this classic August price action. And again, this is something that you want to take notes, take a screenshot of, note down, because again, these things do tend to repeat. And again, it's not an accident that I'm taking it easy during these months. So zooming into the 4 hour chart now, the draw for me is going to be the sell side here, I'd like to see us remain below this fair value gap and this gap here. So we have this range here. I'd like to see us stay below that and kind of rotate to the downside there. So that's what I'm looking for on dollar. Now let's go into the bond market to confirm it. So let's go up to the monthly chart. And now I want to make sure I touched on all the components to your question, Paul. So I'm trying to understand the movement of bonds and yields as they initiate all the movement in the markets. As far as my knowledge, yes, sir, that is correct. Are you going to talk about the impact for dollar with the coming indices together in great detail? Yeah, absolutely. That's what we do every Sunday, Paul. That's what we're doing every Sunday. Absolutely. So, yeah, you're right on with that. The bonds are very instrumental to everything we're doing, and this is why we look at it every single Sunday. This is why I start my week like this, because I want to understand what's the macro perspective, what's the climate of the market I'm trading in, because that's going to give me a lot more precision intraday if I know where these monthly, weekly, daily candles are printing towards. So, looking at the monthly here for bonds. See here. The reason I haven't been talking too much about bonds, Paul, especially this year, I know you've just been working with me for this year. I want to touch on something specific as well. The reason bonds haven't been too influential in my analysis is because look at what we've been doing in bonds. What I just teach you guys about consolidations and high resistance liquidity runs this year. Are we seeing those signatures? Are we sharing the same range? Are we seeing displacement? Not at all, right? So that's telling us we're either in a consolidation or a high resistance liquidity run. So now with that in mind, that's why I haven't been talking too much about bonds, because if you look at it here, we're just overlapping and consolidating. Precision drops off precipitously when you're in a consolidation. So one of the things that my aim is for those I'm coaching and working with is making sure you're focused on the highest, best probability market conditions. That's going to be when the market's in expansion, following consolidation, retracement, or a reversal. So with that in mind, why haven't I been talking about bonds too much? There's just not a whole lot to talk about. They're being held in a tight range. Now, zooming out, right, when bonds are moving, it's very influential over the price action. But for right now, we're consolidating. So now why do I have the high here, here, and here labeled? Because those are of interest to me right now. So what I'm going to look for, let's go out to all three of them here. You can see the bond triad. So it's going to be the ZB is going to be the 30 year, 10 year, and then the 5 year. The benchmark that I like to look at is the 10 year. The 30 year is good, but that's going to be more so related to mortgages and really long-term lending. And that doesn't have as much of an impact as it does. Don't get me wrong, huge impact, right? Housing market, huge. For financials, I like the 10-year yield. There was a gentleman that I was mentored by really early on that had a really profound impact on me and my understanding of the economy, the way everything works, and it was not ICT. ICT obviously built on that a lot, don't get me wrong, but a lot of these things I learned even before that. And one of the big things is the 10-year. So even before price action trading and what you guys can be doing now, I was trading dollar, bonds, and stocks. And I would use the 10-year yield as a benchmark for that. The reason I like the 10-year is because it's going to be a lot more relevant to lending, finance on a more, not too long-term, but also not too short-term either. So I've always liked the 10 year as a benchmark for my analysis. So that's why I like the 10-year more than the 5 and more than the 30, but they're all important. So now, with that being said, looking at the bonds here, we've been in a consolidation, but we're starting to see the market start to work to the upside. So what I look for in consolidations when I'm bearish, like if I'm looking for low prices, and I am still bearish on bonds. If we go out to like a 3-month chart and we zoom like way out here, you can still see we're in a huge downtrend, right? Everything is still very heavy and bearish on these markets. However, if we're bearish and the market consolidates, what I generally tend to look for is the market to run higher, clear out the buy stops, then break down and rotate to the downside. So even if we're going to remain bearish, it'd still be reasonable to see a buy side liquidity run, price in a high. Smart money's going to be selling into that rally and then break it down to the downside. Again, that's what I'm looking for right now. I'll still have to see how we trade, take it day by day. As of right now, though, I am short-term bullish, just looking for those highs there that I mentioned. So looking at the monthly chart, further zooming in now, these highs are relatively equal, really obvious. You can see the market starting to gravitate up towards that. So it'd be reasonable for them to punch out those highs there. And then I look for the same on the 10-year. The 30-year is really lagging. It's really behind, so it may not get up into all those highs. And then that could be an SMT to break down to the downside, but let's not get too far ahead of ourselves. So right now, that's what I'm looking for. Weekly chart for bonds. We're seeing bullishness. We can see clearly here, we have these equal highs the market's trying to gun for. Same thing here, relatively equal highs, market's trying to gun for that. So as of right now, everything's bullish. We're seeing down close candle here, drop down, support, down close candle, support, fair value gap, support. That's institutional order flow. If institutional order flow is bullish, down close candles are going to be supporting price, and gaps and inefficiencies are going to be supporting price as well. So that's true. So I'm going to look for what higher prices, because if the market's showing bullish institutional order flow, that means it's going to be seeking what? Buy stops, which means liquidity above the market, or inefficiencies above the market. And we have the liquidity pools to work with here. So that's what we're looking for on bonds. And now, how does that tie into the dollar? Why the hell are we looking at bonds? Dylan, you don't even trade bonds. That's a good question. Well, the bonds give me confidence in what I'm looking for on the dollar, right? So if we see dollar, why are we seeing pressure in dollar? Let's go up to like a daily chart. Well, the reason we're seeing pressure on dollar is because we're seeing strength in the bonds. So what you have to understand is the bonds and the yields control the demand for dollar. So if the yields or the interest rates are higher, what does that mean? People want to buy dollars because then they can take those dollars and put them in interest. That's going to give them a good return. So if interest rates are going higher, that's going to send the dollar higher. Well, this is the bond price here. So the bond price is going to be inverted to the yield. I know it was a lot for me the first time I understood it as well. It'll click with time. So this is the price of the bond. But as the price of the bond goes up, the actual yield that you get from the bond goes down. So they're inverted. Whole point is that you have to understand is they're going to move opposite the dollar. So if the actual treasuries themselves, which is what we're looking at, are bullish, that's going to put pressure on dollar because the interest rates are going to be dropping. So now think of it logically. If interest rates are dropping and you're going to get less yield or less return for holding dollars, why the hell would you want to hold dollars? So now, why are we seeing a big sell-off in the dollar? Because institutional money, big capital flows, aren't going into the dollar because there's no yield there. If the dollar's bearish, now what does that mean? We're in a risk-on scenario, which means investors aren't putting money into the dollar, capital's not flowing into the dollar, money's moving where into the economy? Did someone say the stock market? You guessed it, right? So that's how we're seeing what? Bullishness in the stock market. So you see what I was saying at the beginning, which is how everything's interrelated. So if you understand the relationship of dollar, bonds, NASDAQ, that's it. That's it. And then when you understand the intraday, what to look for, time and price, how to find setups, it's so easy to do this business. You just have to learn the right skills. So let's go and get back to bonds here. Looking at the daily chart. Yeah, so we're seeing a lot of strength here on the daily chart, really reaching higher, and that's telling me they're going to want to reach higher for those buy stops that we mentioned. Let me give you guys some specific price levels here. So yeah, the 110.21, and then we can call it 110.30 for the 5-year, and then same respective buy side for the other markets as well. So wanted to give you guys a full panoramic view of like what we're doing here. I know some of you guys are new, so I want to touch on what we do with the dollar, why the dollar is important, how the bonds influence the dollar, and how both of those are going to influence the stock market, right? Because if the dollar, right, is bearish, then that means what, right? We're in a risk-on scenario, which means money's moving into the stock market. Because one thing you have to understand, one of the things that really helped this click for me that one of my earlier mentors told me is there's no such thing as like money heaven, right? So if the dollar is selling off, right, and capital is flowing out of the dollar and it's being repriced lower, then where's that money going? It's not going up to money heaven. It's just being moved through the economy. So what you have to understand is how cash flows through the economy, and it'll give you these insights. Because if we're seeing all this bearishness in dollar, and we've been all over that every step of the way, then we can have a lot of confidence for why we'd be looking for higher prices on indices. So why have I been bullish indices? These are all the factors that I'm considering behind the scenes, which not really behind the scenes because I'm here live with you guys every Sunday. So let's get into NASDAQ now. Just wanted to kind of give you guys the full breakdown as to what we're doing here and why we have precision in NASDAQ, why I have precision in dollar, because there's a lot of other things that are being weighed into it. So never said it'd be easy, but I said it'd be worth it. All right, so what I'm watching here on the 3-month chart is this down close candle here. We traded into that. So for the 3-month candle, I'm still bullish. I'm still looking for higher prices on the 3-month. So now when we work down into the monthly here, so we just began the month of September. So we opened, dropped. This could be the low of the month. That's something I'm considering here. We have a wick here, the 50% of the wick. We dropped down into that. Beautiful turning point there. Let me put the red on. I like this red here. So we have this wick, 50% here. Market drops down into it, and it does what? Respects the upper half. Exactly what you want to see, right? So we drop down, wick, consequent encroachment, which is just wick midpoint. Respect the upper half. That's telling you we're strong. Market rallies higher. I'm looking for the previous month's high here. So on the monthly chart, looking for higher prices. We have a gap here, gap here. Generally, we look for what? Gaps to fill in, right? Gaps like to get filled. However, if the market's really bullish and it doesn't fill the gap, again, that's giving you insight into how strong or weak institutional order flow is. So based off what signatures you're getting in the price action, you can know with a great deal of confidence if a market is really bullish or really bearish. And those are things I'm using to ferret out really good trades and miss out on the okay trades that could work, could not. So looking for bullishness on the monthly chart, could price in the monthly low here. That'd be interesting. And then punch through the buy side liquidity PMH, previous month's high. So I'm looking at that previous month's candle there. That's it for the monthly. Let's drop down into the weekly chart here. So what I've been watching the past couple of weeks, or few weeks rather, while I was not trading, I was looking at higher time frames. I was watching this down close candle here. This is a bullish order block in my analysis. So you can see we dropped down into it once, dropped down into it again, but look at the bodies. Put the midline on here. We got the bodies doing what? Staying in the upper half, right? So let me show you guys what that looks like here. So you can see we have the 50% of that range here, and then the bodies are staying in the upper half. So yeah, we wicked down into it, but they quickly traded higher and stayed out of the lower half. So as long as down close candles are supporting price, we're bullish, right? Like I just said, order flow is really simple. Our down close candle supporting price and our inefficiency supporting price. Have we been seeing that the entire, well, really since April? Absolutely. So why are we looking for shorts? And not that shorts can't be traded. Like I said, the aim with my goal in coaching and sharing with you guys is the highest probability setups, right? So can you go short in this? Sure. But where are the highest probability setups with institutional sponsorship going to form? On the long end, because it's pointing higher on the 3-month, the monthly, and the weekly. So again, you have to be able to organize all that information top down. So bullish order block here on the weekly. We're finding support there. That's telling us it's bullish. So even if you don't know, man, order block, the wick on the monthly, man, this is a lot of stuff. Look at it simple. Our down close candle supporting price. And then over time, as you show up every day, you're going to keep taking notes and you're going to get really good at doing this, and you'll be able to consider all these factors. Don't rush to get to that point. It'll happen with time. So bullish order block, finding support here, previous month's high, I'm looking for in the crosshairs. What would change my outlook on dollars if we lose this order block? If we lose this down close candle to the downside, then my attention would go to this inefficiency, sell side, but I'm not going to consider that right now because everything is 100% bullish as of right now. All right, now dropping into the daily here. So not as bad a price action as we had in the US dollar for the month of August. Not as bad, but also you can see a little more range bound, right? You can see we, on August 1st here, the first trading day of August, repriced higher, created a high, created a low, and then we did what? We pulled down into the range and then we just consolidated here. So if you guys remember when we were live on, what day did we do tape reading, guys? What day did we do tape reading this week? Was that on Wednesday? What day did I tape read with you guys? For some reason, I'm having a senior moment here. What time did it? Yeah, I think it was Wednesday. Yeah, it was Wednesday. Yeah, it was his bullish day. Let me look at the hourly chart. I'll remember the price action. Yeah, Wednesday we were live. I remember we called all these targets. It was an easy run up into the 23,509 level. Yep, Wednesday we were live. Okay. So we were bullish, and this is more directed towards the mentorship group. Why was I bullish on Wednesday, and why was I bullish into the week? Well, one of the things you have to understand with consolidations, and this is all going to be taught in the content as well, when you get to trading consolidations, all this insight is going to be taught. So you're going to know how I knew to be bullish on this day because of how we're trading inside the range. So what do I mean? Let me just go to the NQ1 chart. Resistance, double top. Now you guys know the secret, what I'm actually trading, right? I'm trading resistance. I'm trading double tops. I'm just pretending with the ICT stuff. I'm just kidding. I think that was a teaching that I was recording of market maker traps, because what we actually do is we turn retail logic upside down and we attack it. That's how we find setups all the time. So I don't want you guys to think, oh, we got him. He's trading support and resistance, low key. No. We're smoking those thought processes. All right, so looking at the NASDAQ here, we have a range low, range high. I'm breaking down that range. Let me take off the quadrants so it's not like overwhelming here at first. All right, so we have a low, we have a high, and we have equilibrium, or 50% of this range. When we're in a consolidation, equilibrium is going to be one of the most important price levels that you have. Why? Because when a market is consolidating, what's it doing? What are you saying when a market's in consolidation? It's not just choppiness or chop. The market's doing very specific things, even in consolidations, because we understand the market's controlled by AI. It's rigged, right? So as price action traders, we understand we have a range low, we have a range high, and we have equilibrium. What's the market been doing since we've been in this range? It'll drop down to what? A discount market, pull back up into a premium market, right? Because this is equilibrium, 50%. Anything above it is premium. Anything below it is discount. So the market drops down into a discount. To use retail terms, it's very oversold, right? Of course, we don't, speak like that, but for you guys to understand it, it's a very oversold market. And it does what? Goes back up into a premium. Now it's what? It's overbought. So it's going to do what? Come back down into a discount. Take out the sell side. Here. Take out the sell side into discount. Now what? We're oversold. So now it's going to do what? reach back up into a premium. What? Above equilibrium. Reach for what? The buy stops in a premium. And then does what? Pulls back down to the range. So a lot of people were caught off guard by the Friday market reversal, but you have to understand we're in what? We're in consolidation. So you want to be very careful with looking for extrapolated runs when we're seeing a consolidation profile. You guys want me to take this to another level for you? Let me see. Yeah, Joe, it's Wednesday. Yes, sir. Yeah, I remembered. JS, what's your opinion on SMT with ES and NASDAQ on the daily? Yes, sir. I'll cover that in a moment. That's a good question. All right, let's take it to another level. All right, so looking at the range here, you can further break it up into quadrants. So let me take off the quadrants here. All right, so now taking it one step further, we talked about how the equilibrium is premium and discount, but now let's look at the extremes. This is an extreme discount, and this is an extreme premium. So when you're in a consolidation or whenever you're trading a consolidation on any time frame, you have to determine what range are we in. Well, it's very easy to see this range high, this range low. Now, you can break the range up into quadrants. Obviously, we talked about the 50%, how that's important, but now this is how we use the 25 and the 75% of the respective range. What I look for when I'm trading in consolidation profiles, and of course, this is all taught in the membership. This is all review for you guys that are working with me. If you haven't got to that point yet, don't worry, it's a progression. I'm taking you somewhere. All this is going to click easily with time. Just keep studying. So now, more specifically, we talked about the equilibrium price point, right, and how that's used. But now, how do we use the 25 and the 75% respectively? Well, now this is going to be like a really deep discount. So now this is extremely oversold. And then above the 75% is going to be extremely overbought. So when I'm trading in consolidations, I'm not going to try to go short down here. And I'm not going to try to go long up here. You see what I'm saying? Because it's going to do what? The range is set, and then we do what? We drop down into what? This range here. And then we trade into what? An oversold or a deep discount, to use our terms. So this is a very deep discounted market, and they run the sell stops here. So they run the sell stops, and what are they going to do? Run it back up into a premium, a deep overbought premium, which is going to be above the 25%. And then what do? They bring it back down into a discount below 75%, and then do what? Take it back up into the buy side above the 25%. So with this in mind, how can you use that information to trade it? Well, whenever you're trading in a consolidation, this is what I'm doing. So I'm going to look at where the liquidity pools are in reference to this range. So then when we take out this low here and run higher, I'm going to look for a run into a premium. Then once we get run into a premium, I'm going to look for a drop into a deep discount into these sell stops here. But it's in a consolidation, so it's not going to break the range low or the range high. So take out the sell stops, and then what we're going to look for. Why was I bullish on Wednesday when we were trading? Because the market's going to do what? Expand from a deep oversold discount to an overbought premium. That's how I'm able to do these things. So if you understand where that daily candle's going, you see how easy it is for me to sit down live with you guys. 7 to 9:30 consolidated. So what are we going to look for at 9:30? Drop into sell side. London already priced in the low of the day. So we're going to look for a retracement, do a continuation. That's why it's so easy for me to do this, because I'm weighing out these factors here. So it's really easy to see why there'd be a bullish bias, because we're trading from an oversold market, and it's going to want to gravitate up into a premium. So a little more insight, more of a review for you guys in the membership. When we were live trading, I want to share a little more insight into what allowed me to predict that. I was feeling a little under the weather, was sick for a few days, so I don't know how well my explanation actually was with regard to all that. So I wanted to revisit that for you guys. Absolutely. On another level, absolutely. Much more to come, guys. Much more to come. Like I said, the YouTube side, because I've been building out this trading university for the first half of the year, haven't really been able to put the gas on YouTube, but a lot more insights going to come to you guys on YouTube. For those of you guys that aren't able to work with me directly, but you still want the free insights, much more coming on that. If you guys think this is good, man, wait till you see what I really got. All right, so going back to NASDAQ now, let me put these levels back on here. All right, so we got the buy side here. We understand that's our draw longer term, right? As long as the weekly chart remains above that order block that we're talking about. So looking at the daily chart here, this is where it gets, again, a little more difficult, because now we're in a consolidation. So what have we done? We've taken out the high, but we did what? We pulled back down below the high. So let me show you what I'm referring to here. So you see this high here was taken out, but then look at what the market did. And then now actually looking at it on the hourly chart, you guys can see how cool this is. So now look at these ranges. Now look at how much clarity you have in price action. Drops down, oversold, trades up into a premium. Drops down, oversold, back up into a premium. And you can see how easy it is to navigate consolidations, but you have to know what you're doing. If you're in here gambling, you're going to get smoked. You have to understand how to read price action. So I just want to touch on that. I'm going to take this off now just to keep it clean. So there's a little masterclass on trading consolidations. All right. So looking at the hourly chart here. So yeah, before I get into this here, let's talk about Wednesday. Now you guys can see how Wednesday, I had a great deal of confidence to be a buyer for the morning session here, because we did what? We priced in a London low of the day. We see sponsorship come in, retracement in New York. That's going to offer what? A discount for smart money to go long. And then that's why the 509 target, here was really easy money for us that morning here. This is a really easy setup when you understand how the factors come together. And you can see I took it all the way up into a premium, reaching for the buy side here. So we had these equal highs as a draw. They toasted those, and then they kept it going for the high here. Now, what I'm watching here is how we traded above that high. So let me take this off here. So generally, if we're bullish and we trade through a high, we want to see it do what? Continue, right? And like show speed above it. We don't like to see the market trade higher and then really displace and break back down, because that's indicating potential market reversal profile. So as of right now, guys, I am neutral to bullish. I'm bullish because of, again, the monthly, the weekly, and everything we're looking at there. However, again, we have to contend with the fact that the daily chart is in a consolidation, or more specifically, the 4-hour chart. You can see it a lot clearer. So we have to contend with the fact that the 4 hours in a consolidation. So again, Dylan, why are you taking it easy on August, man? Because this stuff's predictable. But as I just showed you, right, it's still tradable. It's just going to be a little more difficult, right? So I'd rather just trade easy price action like we had at the beginning of the year, right, when the market's just going straight up, right? And it's really easy to trade directional price action. You can see that if you want to trade a consolidation, it's tradable, but there's just a lot more things you have to be able to consider to know how to trade these types of market environments well, which is why I tell newer developing traders, they take it easy. So for those of you guys that have been working with me that, we were speaking in August in the private membership group, you guys all did a great job, obviously saving yourself from the carnage that could have unfolded if you didn't know how to navigate the August price action. So we took out the high, but then we broke back down. I didn't like to see that because if we're going to continue up into these highs here, I'd want to see the market really start to see speed above that. So now we have to go back to the protocols I shared with regard to where we're at in the consolidation. So and this is what's going to give me the bias Monday going into Tuesday. So I'm going to watch this hourly gap here and see how we trade there, because we already traded up into an extreme overbought market. And then we saw what? Huge breakdown to the downside. A lot of displacement, a lot of sponsorship coming in there. So what I'm going to be watching is this hourly gap here. And this is going to be one of the determining factors for what I'm looking for here today. Let me make that gray because it's neutral. So I'm going to watch this hourly gap here going into Monday. And then if we start to sell off from here, then what am I going to look for? The 50% or the equilibrium of the entire consolidation range. And then we also have sell side here, sell side there. And those would be relatively equal lows for us to attack on the downside. Then we have these equal lows here. And then if we really start to accelerate, then we could potentially look for all this down here. But again, because of higher time frame, I'm bullish. I'm very reluctant to call lower prices for an extended move. So neutral to bullish, this fair value gap is going to be key. If we trade above it, then that's going to be easy support, rally, and then that's how I would use this gap here. So that's what I'm considering going into this week. I was just asked by a gentleman, which is a good question. How am I relating the SMT with NASDAQ and the SPOOs? All right, so S&P took out this high here while the NASDAQ did not. So what I'm looking for with regard to the S&P is, does it hold? All right, so does it hold, meaning do we keep the SMT intact and do we start breaking down? Then if I see that, then that could allow me to potentially pivot, look for sell side here, look for sell side here, and then look for lower prices. As of right now, again, I'm not trying to call a top in this market. Like we've been talking about the entire year, calling a top in a bullish market, just it doesn't serve you well. It does not serve you well at all. So I'm sticking to my guns, looking for higher prices. However, to wrap up your question, the S&P is significant. If it holds, then that would potentially shift what I'm looking for, and then have to see what we get going into the week. Do we start getting displacements, breakdowns of the downside, things like that would constitute a reversal? Then I could potentially entertain that idea. But as of right now, sticking to the bias, sticking to looking at higher prices, staying with the protocols that work very well at all-time highs, which is just continuing trusting your buy models. So that's how I'm looking at the S&P there. All right, so went on a little longer with the analysis than I wanted. Usually I just go about 30 minutes, but I'm going to share a lot of details with you guys today. I know it's been a while, so I figured I would share a little more today than usual. Usually this stuff's just reserved for Zoom calls when we're in mentorship and whatnot, but wanted to peel the curtain back, give you guys some insights for consolidation so that next August you guys can sort out the business. So any questions from you guys before we get going? Kennedy didn't participate in August, for sure would have been slaughtered. Yeah, good to recognize that. And it doesn't mean you can never trade August, right? It just means that maybe as you're developing, it doesn't make sense to do so. But over time, as you get more experience and you work with somebody who can really show you how to read price action, then you can see it's still tradable, right? I mean, you can still make sense out of what it's doing, but it just requires a lot more levels and layers of understanding if you want to trade it well. So hopefully that makes sense there. You probably did the right thing not trading it though. But again, it all depends on your experience level and how much time you've invested into this. Joe, happy Sunday, brother. Yeah, man. I'm glad to be home. Glad to be back to business, Joe. Henry, excellent discussion and explanation. Thank you. Yes, sir, Henry. My absolute pleasure, sir. Joe, great reminder of the relation of the bonds. Dollar helps with the outlook for stocks on swing trades. Oh, absolutely, Joe. Absolutely. For scalping, like for what I'm doing intraday, I don't need COT. I don't need seasonal tendencies. I don't need to know what the dollar's doing. I don't need to know what the bond's doing. I don't need to know any of that for me to make money every day intraday trade, or not every day. I don't want to give you guys the wrong idea that I'm making money every day, but for me to go in there and find setups every day, I don't need any of those factors. But for long-term analysis, for where monthly, weekly, daily charts are going, I absolutely do need to know where those other factors are pointing so that I can then make a more logical conclusion for what I'm looking for with indices. But for you with swing trading, you definitely need to see these insights because it's going to give you trust. Because with swing trading, many times you're holding trades for a week to 2 weeks, 2 weeks plus many times as a swing trader. So if you're going to hold for daily and weekly candles, that means you have to understand where the monthly, weekly, and the daily is going. And one of the things that's going to help unlock that understanding is all these other components and how they come together. So absolutely, Joe, really good takeaway. And with your style of trading, definitely, these insights will help solidify and put the probabilities more in your favor, right? That's one other thing I want to talk about. All these things we talked about here, and it's still not a guarantee, right? It just puts the probabilities in your favor, right? Because we understand that trading is a probabilistic game. So if you can just overwhelmingly put the probabilities in your favor, then you can trade 70%, 80%, really easy, right? But if you don't have as much factors and you're kind of flipping a quarter using support and resistance or indicators or whatever, then you'll just have to be comfortable with the lower strike rate. You can still be profitable with good money management, but that doesn't float my boat. So just figured I'd throw that in there. JS, what's your opinion on SMT? Yeah, I already covered that. Great question, JS. Hopefully that covered your question. If you have any follow-ups on that, let me know, man. Joe, Wednesday, yes, sir. We missed this. Yeah, I'm glad to be back, Joe. Glad to be back, brother. Awesome. Please hit the like button for this great content. Yeah, appreciate that. Please do, on the way out, if this has been helpful, please do hit the like button. Amy, quick question. Do you use weekly profile in your analysis? Absolutely. Yeah. Every week, that's something I'm considering. So looking at, let me see if I can see. So I'm trying to see if I can go back to where I have the, oh, there we go. Yeah, weekly profile is always a consideration. Now, I don't get too caught up in the templates themselves. I more so look at what's the draw? What are we looking for? We covered how this week the draw was bullish, right? We're going to expand higher, right? We talked about why that level, because I broke down the consolidation, all that good stuff. So whatever, we understand this is the draw here. So if the market, Joe, you like the energy? Yeah, it's amazing what a little rest can do. Much more to come, man. All right, so we understand this is the draw here, right? We're looking for the market to gravitate up into here. Well, if we're looking for the market to trade higher, we understand that the market's not just going to open on Monday and rip higher, because we understand that the markets are being delivered for smart money entities, right? So if you're bullish and you're looking for this high to deliver, what would you rather see first? A drop. So right there, we understand, okay, if we're looking for a weekly expansion higher, then what do we want to see first? We want to see a drop. What time do we look for a drop? Early in the week, right? So what do we see Monday? Monday's consolidation. Generally, Mondays are going to be consolidation because it's going to be the accumulation of the weekly range. So then they do what? They drop it on Tuesday. Ooh, you've heard that before. Tuesday, low of the week. When do we look for that? When we're bullish, generally, I'm going to look for Tuesday, low of the week. The low of the week can form Monday, Tuesday, Wednesday. I'm not as much getting caught up in the templates themselves because I've seen that as a problem, especially with those I've coached a lot that have studied a lot of ICT's content, which is amazing, by the way. Don't get me wrong. And the templates are great for structures and framework. But what I learned you don't want to get too caught up in is always focusing on this template, this template, this template. Just look at what the price action is telling you. So if we're bullish and we consolidate on Monday, then logically I'll expect to drop on Tuesday. But if we just drop straight out of the gate on Monday, then that can be the Judas swing, and then Monday can price in the low of the week. But what if we consolidate Monday going into Tuesday, then Wednesday drops, then I'll look for Wednesday low of the week. So it's a matter of, first, you have to know what's the market drawing to. That's the first thing ever. That's why in mentorship, right, month one, drawing liquidity. You have to understand where's that market drawing to, because without it, everything else is going to break down. But now that we understand where the market's drawing, now we look for time and price. I look for low of the week to form Monday, Tuesday, or Wednesday. Now, a lot of that's going to depend on the economic calendar and other factors, but that's something I'm considering every single trading week. Absolutely. Great question, Amy. Brother, loving this energy? Yes, sir. Yes. Amy, quick question. How do you scout and trade the expansion within AMD? Yeah, so I'll look at an example that I traded live with the team, or I didn't actually trade live, it was a tape reading, but it was all called out live, so it's just as good. All right. Well, first, again, we have to cover drawn liquidity. So that's going to be the first order of business here. So looking at Wednesday, right, we see the market expanding higher, right? So for AMD, power of three, for whatever concept you're trying to employ, the first thing that has to be understood is the drawn liquidity. Because if you don't know where the market is drawing to, then all these concepts are going to fail you. So first things first, we understand the market's drawing here to these highs here. So we can understand that that's going to be a logical draw for price. Touched on why the daily was bullish. So we see London do what? Drop, make the low of the day. From here, we see an expansion. From the expansion, we get a retracement. The retracement is going to happen in New York. So now dropping down into our 15-minute. New York is always continuation profile. I very rarely look for reversal profile in New York. When I look for reversal profile in New York, it's once we reached a higher time frame PD array. But unless we've done that, I'm usually not considering reversal profile for New York. So AMD, that's what I'm explaining. But there's a lot of other components you got to understand for AMD to be effective. So I'm going to cover this AMD cycle here: accumulation, manipulation, distribution. This was all called live. That's why I want to use this example, because for those that were sitting with me, walking to me candle by candle, wow, it's really making sense. So 15-minute chart here. We have a range low, range high, and we're looking for this high to deliver here. Just like I talked about in the beginning of the week, if we're bullish, we want to see what first to drop, right? We want to see a move against what we're looking for, because that's going to sucker in retail to go short, right? They're going to be looking for their breakout to the downside, their orb, whatever it is they're going to be trading. It's going to put them on the wrong side of the market here. So that breakdown here is going to put them on the wrong side. So with the, sorry, let me get the dealing range here. So we got the 50% here. So you see the market drops. A lot of traders doing a lot of different things in terms of strategies and what they're doing. A lot of traders, for example, like this first 15-minute candle here at 9:30, as soon as it breaks down below that, they're trying to sell short. Personally, that's not something I'm going to use because it just doesn't make a lot of sense to me. So I'm looking at these components where, okay, the market's going to draw here. They dropped it into a discount market. That's going to allow smart money to buy when retail wants to sell. Retail wants to short here because they saw the drop at 9:30 and they're thinking, wow, it dropped really fast. It's probably going to keep going. And then they rake them across the coals and send it higher. So now AMD, right? Let me get back in here. 1 minute chart. So a little sloppy, I will admit, and that's because it's non-farm payroll week. So that's another thing we talk about, right? Non-farm payroll being lighter, but you can still see the market's doing the same things. So looking at this here, what do we have? We put on the drawing mode here. We have an accumulation, right? And then we have a manipulation to the downside. Let's make that red here. So accumulation, manipulation. And then now what do we have here? Our distribution, right? And then let me make this gray. Here you go. Accumulation, manipulation at time, 9:30 open. And here's my one setup for life. 9:30 open, run sell side. They're going to take it to buy side. Easy money, week after week after week after week. So now you can see how power of three, all those components beautifully tie together with everything we're doing. But you have to understand where the market's drawing to, where it's going. And again, we talked about 23,509 when we were live, and that was beautifully delivered. And it's not random that made the high of the day. So as I would usually say in the Discord, screenshot it, log it. It's not random. So hopefully that answers your question. Amy, with regard to AMD, pretty straightforward, but you have to understand other components and how it fits into the broader narrative. Because if you don't understand that, You're going to be looking for patterns, and that's why most price action ICT traders that know a lot of stuff, they have a lot of information, but they're making zero money. And it's because you have to understand how it all comes together, and more importantly, you have to be taught how to make money with it. So that's how all that kind of comes together. Joe, thanks, Dylan. Yes, sir. My pleasure, man. Glad to be here with you guys. Abraham, nice to have you back. It is glad to be back, my man. Thanks for joining. Amy, thank you. Glad it was helpful. Absolutely. All right, guys. Do not see any more questions here. If you have any more, give you guys a couple moments. It's about 2:03. Not in any hurry to run out of here, though. Got a few minutes. Haven't been with you guys for a few weeks, so happy to spend a few more minutes with you guys. Miss you, Dylan. It is refreshing to have you back. Glad to be back. Glad to be back. All right, guys. Hit the like button on your way out if this was helpful. Hopefully, you guys were able to get some insights that definitely won't get anywhere else. So hopefully it was insightful, guys. I will see you guys on the next one. What is the pricing of the mentorship? So we have different mentorship tracks. It all depends on kind of how much support you want, where you're at in your trading. There's a lot of different ways you could go with that. It just depends on how much support you would need, where you're at. Those are all things we could talk about. So if you're interested in working with me directly, many already have, just reach out to my team. We could book a call and see where you're at and see if we can get you some help. Yeah, so one of the things that would kind of help me give you a specific price, we kind of understanding where you're at. And then from the call, I'll be able to customize the plan to you, because I don't want you to get things you don't need, but I want you to make sure you have everything you do need, so that obviously on the other side of that investment, you're going to be making some big bank. Because obviously, if you learn the skill set, the investment's a drop in the bucket. So that's the goal, but I need to get on the same page with you so I can give you what you need to get you to where you need to get to. Masterclass, appreciate it, Gabriel. Thank you very much. Huge insight for consolidation profiles and continuation. Thanks a lot. Absolutely. This really unlocked a lot for me. When I understood this and I was able to piece all that together, the amount of clarity I had in consolidations was just next level. And it just gives you so much more insight than not knowing these concepts, ideas. Simon would love to see gold. Yeah, let's take a look at gold. I would love to take a look at gold. So for those of you guys that have been with me for a while, you guys know I have been a raging bull on the metals, right? Metals, raging bull. Nobody's a bigger bull than this guy. And why is that? Because the financial system is cracking. it's not funny, but it's funny because most people don't understand it. But gold is going to keep going much higher, and it's going to keep going higher on the back of a currency that's getting inflated. So it's not that gold is going higher, it's that your dollars are losing purchasing power. So everything's going to be more expensive, right? You looked at real estate, cars, gold, food, right? Food, a lot of factors, right? Prices are really going up. Most of the numbers are all fake anyway, right? So when they give you the CPI and they say it's like 2%, whatever, total bullshit. Because if you just open your eyes and look around, you'll see that, wow, inflation's hundreds of percent, because food doubled and tripled, right? Eggs aren't what they used to be, right? Your meat isn't what it used to be. Cars aren't what they used to be. They've doubled and tripled. Homes aren't what they used to be. So when you just open your eyes and you look at actual inflation, you see, wow, this shit is unbelievable. And the numbers that they're telling us in terms of the CPI print and 2%, yeah, my ass, right? So why am I saying that? Because you have to understand the mechanism. You have to understand why gold's going to keep going higher. And it's because they're going to keep inflating this currency. They just passed another $5 trillion to print. So what that's going to do, it's going to be highly inflationary. And what they don't tell you is that each president has to print more than the last one. So if you look at all the past presidents, each one printed more than the other. So don't get caught up in the Republican, Democrat. I think that's all bullshit anyway. But Obama printed more than the previous guy, right? Trump printed more than him. Biden printed more than him. And now Trump's printing more than Biden. So it's not a Republican, Democrat issue. It's the fact that the government's been sold out. That's a whole nother conversation for another day. What you got to understand is that gold's going to keep going higher. Silver's going to keep going higher, much higher on the back of inflation. So what have I been telling you guys with gold? Don't call it top. Keep looking for higher prices. And before we left off, if you guys remember, I told you guys it's reasonable for the market to pause and consolidate here. Why? Because we've already seen a huge run up from the 1800s. We've gone vertical. So it's reasonable for the market to consolidate, accumulate more orders at the bank level. Now they're going to keep sending it higher. So raging bull on metals, and that has not changed. So everything is consistent for gold and metals to keep going higher. And especially as the dollar weakens here, that's going to allow gold to really find its legs and reach higher. Royal Madness, XPT on the monthly looks nice for long-term investments. I don't even know what that is. Let me check it out. XPT. Oh, platinum. Oh, platinum. Okay, I got you. Yeah. Go to futures. Yeah, I got you. Yeah, so I'm not too big in the metals outside of gold and silver, of course. But I don't really look at platinum too much. Like platinum, palladium, I don't really work with them too much. Consolidation, leaving that range. Fair value gap, we dropped down into that. Finding support here, yeah. All metals are bullish. And again, I'm bullish on most commodities because, again, if commodities are priced in dollars and the dollar is getting weaker, what does that mean for things that are priced in dollars? Like everything you see, price is going to keep going higher. So, yeah, I couldn't agree more. I think we're going to see all metals see some upside going forward. Yeah, we're also, I'm seeing the same thing. Aslam, may I ask, how can this shit stop getting expensive? May I know your opinion? You probably don't want to hear my answer. It's not going to. It's going to keep getting much more expensive. And I don't say that to scare you guys. I say that to let you know. Because I was glad 5 years ago, 6 years ago to know shit's about to get deep. And we're in the time where shit's getting deep. Stuff's more expensive. It's going to be really crazy. Jobs are nowhere, right? If you look at the economy in the US, people can't find jobs. People graduated university and now they're screwed. I saw the writing on the wall years ago. So that's why I was like, oh shit, man, I need to get my stuff together and I need to learn a skill that can outpace inflation. That can allow me to make more money than the inflation rate is going to be. So my advice to you is, or my advice to anybody, especially the motivated individuals, would be don't worry too much about how to get the price of shit down. Learn more skills so that you can make more so that you don't have to worry about inflation. Because inflation is not going to change. It's just going to keep going much, much higher, which is why it's so important to learn the skill. Lock in, learn the skill, because stuff's just going to get more expensive. I don't say that to scare you. It shouldn't rush you, but understand what's happening and understand what you need to do to put yourself and your family on the right side of this stuff, because stuff's going to get real deep, and you heard it here first. Creative wall, if the dollar's dropping, that means NASDAQ is going up. Yes. And I already gave a lot of information in the stream already to support why that is. So if you want to understand more details on that, that's already been covered. And as always, the recording will be available. Cyclops, give the stream a like, everybody. Yes, sir. Please do. Thank you, man. Simon, thanks, brother. Yes, sir. My pleasure. I know it's the truth, but why they make such a thing? Yeah, well, that's a whole other question, the why behind it. It's for control. It's for control, because think, if they bring down the dollar, then they're going to be able to bring what? A new central bank digital currency. A central bank digital currency is programmable. If it's programmable, it means what? They can give it an expiration date. They can put restrictions on where and when you can spend it. Maybe if you talk bad about the government, they'll just shut your money off. And that's kind of the reality that we're moving into. And if you look at China, it's already happening there. So if you want to see what's going to happen in the US, Europe, and other developed countries, take a gander on over to China and see what's happening there, and it'll get very clear what we're about to go into here in the US. But to bring that about, think about it, right? They're not just going to say, hey, look, we're switching everything around, guys. We're changing the system, baby. They have to bring about a crisis to need that new solution. So I'm not going to get too much more into that here. I don't want YouTube to ban me or anything, but there's reasons behind why they're doing it, and it's for control. Because desperate, suffering population is going to accept anything that they bring about. So that's why it sucks, but it is good to know because it gives you the high ground. And now you can say, wow, I really need to get my shit together and learn this skill because stuff ain't getting easier. And I'm glad I knew that. And hopefully you guys can take this insight and prepare yourself accordingly. Henry, exactly correct on inflation. Oh, yes, sir. Yeah, I've been living this for a lot of years, brother. I've been living this for a lot of years. Yes, sir. Amy, last question. What is your analysis for Bitcoin and oil? Yes. All right, so what I'm watching for BTC is these down close candles here. So you have a down close candle here, looking at that as a bullish order block. We drop down into that. I want to see if they can accumulate here and send it higher. If we're going to continue seeing weaker dollar, then I'm going to look for higher Bitcoin. What you got to watch on the daily chart, though, be very mindful of is this breaker here. So far, hit it, broke down, hit it, broke down, hit it, starting to sell off. So watch this breaker. If we remain below it, then we're bearish. Don't really favor that because top down, I mean, higher time frame, we are bullish. But watch this breaker. So if we get above this breaker, we're game on for all-time highs and continuation on Bitcoin. And then what was the other one? Oil. Take a look at oil. Oil just hasn't been moving much. Haven't really been too much of a fan of oil. Ever since we saw that initial pump here and then we broke back down, we didn't really get any sponsorship or displacement to the upside. So it's just really been kind of no man's land for me. What we're seeing right now, though, is little gap here, respected, up close candle, respected, up close candle, respected here. And we're starting to sell off. So as of right now, weekly chart, we're looking at weakness on crude oil. Run higher, buy side cleared. We also have a breaker block here. Right. The reason this is a breaker is because we have a higher high, breaks down. This would be a bullish order block, but it reverses its role in a sell program, right? Market hits it, sells off, so we have sell side here. And then if we run through that, then we'll have the sell side down here. So my interest for oil, first target would be 61.40, which doesn't give a lot of range, just these equal lows here. And then if we accelerate through that, I like the 59.75, 74 level. So that's what I like on crude for right now. Eslam, got what you mean? Welcome to the Matrix. Yes, sir. Welcome to the Matrix, man. Welcome to the Matrix. That's why you got to beat it. You got to beat it. You got to acquire knowledge. The only way is to acquire knowledge. Knowledge is power. That's why they don't want you with it. Ro, much love, Dylan. Thank you for your time here on Sunday. Yeah, my pleasure, guys. Glad to be here with you guys. All right, guys. Have a good rest of your Sunday. I will be departing. I will see you guys the next time I see you. I'm not sure what day I'll be live, but I'll get my schedule in order and I'll let you guys know what I'll be doing on the free side as well for you guys on YouTube. Like I said, I got to finish building this university that I'm doing for the mentorship side. And once I get that done, we will be back to business on YouTube for you guys in the free community. So with that being said, guys, take care, stay safe. Hope this one was insightful. And I want to leave you guys off with no better time to learn this skill set and learn how to do it right, because it just makes your life better, makes it better overall. Gives you peace of mind, and when you have the skill set to trade and do it profitably, things really change for you. And especially in times we're in now where things are expensive, things are difficult, it's very important to have a skill set, even if you just make extra income, even if you can just make an extra $2,000-3,000 a month from your trading, right? Is that shit? No, not in times like this where you can use that money to feed yourself, clothe yourself, and rent whatever you may need. So I'll leave you guys off with that. Take care, stay safe, and I will see you guys on the next one. Bye, everyone.